Hello everyone, welcome again to another monthly market update. But before we start, please click this subscribe button below so you don't miss any of these great videos. Once again, we'll be answering age-old question of how is the market using stats, data, and my personal analysis on the activities that were occurred in October 2020. First of all, we will look at the sales summary, the inventory story, and the pricing picture. And then I'll be giving my advice to buyers, sellers, and investors. Sales for the month of October were up significantly comparing to the same time 2019. We continue our strong push from September right on through the month of October. As we discussed in previous months, the showing tracker still indicates there is a strong buyer's demand still out there. And it shouldn't come to anybody's surprise that the results ended up where they did. As we finished the last month, we experienced 100% increased number of showings comparing to the same time last year. As we enter November, has this slowed down? Well, yes, a little. As you can see, the total number of showings has trended down a bit, but it still remains 100% higher than the last year, which indicates that this November will still remain strong. These are the sales stats for October. The total market saw whooping 23% more listings sold in October this year comparing to October last year. Of course, the detached market led the way with 35% more listings sold. Semi-detached has really good month and 21% more listings sold. Row homes and townhouses about 9% more. And apartments again were very slow wheel in the market with minus 6%. Again, each market segment acts differently and you need to be guided by decision directly influencing your market segment, your community and your personal situation. Please don't hesitate to reach out and I'll be more than happy to help you. October was our second best month this year. This is enough sales for now. I'm going to discuss more crucial pieces of information in my sellers and a buyer's advice segment. So please stay until the end. And this graph shows data going all the way back to May when we start pulling out slowly from the pandemic. The trend line is showing positive trajectory, even though we are well past the seasonal peak of the year. How strong the second half of the year has been so far. This graph shows the month of October. And again, we see that sales picked it up how the month went along. This is better than expected and should start trending down how we start approaching Christmas. Trending up towards the end of the month shows how the gap continues to grow between this year and the last year production. It's quite impressive. Now it's the time for the inventory story. Let's start with the following graph, which demonstrates the number of new listings we were putting to the market comparing to the same time last year. Do you see big bumps at the beginning of this month? At the beginning of October, we were busy adding new listings to the market. Then it started to normalize and then even to drop off how the end of the month approached. And this next graph shows exactly this thing in an easy to follow way. Less and less new listings as the month went along. That's exactly what we want to see. And the third graph shows not only the month of October, went all the way back when we start getting slowly out from the pandemic lockdown and times of no activity. We have certainly peaked and now we are on the downside of our new listings per week. This is very helpful for us and as I will discuss in a pricing picture. On this last inventory graph, you will see that we had 13% less listings on the market than at the same time last year. It is the biggest gap that we have had since the COVID started. Just as with the sales, the results are different for all four market segments. And here is the breakdown for October 2020 versus the same time last year. Detached segment has 0% more listings coming to the market, but the inventory was 22% lower than the last year. Semi-detached, about 1% less new listings on the market than the last year and 21% less inventory on the market. Row homes 8% less new listings and 6% less inventory, and apartments 26% more new listings on the market and 9% more inventory. Certainly the detached and semi-detached segment has seen huge drop in inventory compared to the same time last year, and that was helped by increased sales. So how does this all reflect to the pricing? I'm glad to report that the benchmark price did increase. How sales is overperforming the seasonal norms. As a city, we saw the benchmark price increase to $422,600 or 0.55%. For the year as a whole, we are still 1% below where 2020 started. This is very respectable place for us to be. And again, all four markets has performed differently. So let's take a look at the straight numbers. Detached 1.8%, semi-detached minus 0.9%, row homes minus 5.6%, and apartments minus 1.3%. Looking overall, detached and semi-detached market is in a really healthy situation. Where row houses, there is some concerns on how things are going to downplay by the end of the year. Only the market that is performing in a negative is apartment segment. The apartment market has pushed off major price adjustments, and in my opinion, the reason for that is just that the sellers don't have much to give, and it is near a baseline low. So as mentioned, in all these segments, the property type matters. So don't be shy to reach out. Stay informed about your specific ones, about your specific area, and you'll be fine. Here is the graph that compares sales per week in October 2020 and sales per week from October last year. The top line is now and the bottom line is the last year. What you will notice mostly is a giant gap between the two. And then take a look at the second graph. You will see that we are floating around 75% throughout the September and in the first 3 weeks of October. And then you will see the things trend up significantly. This graph shows sales per day versus listings per day. We finished the month as a city basically selling 1-to-1 of everything that comes to the market. And then this graph shows total months of supply week by week. And this graph continues to trend down. All of those things together paint the picture of an improved market. Improved and a fast-paced. When all three graphs are being viewed by prospective buyer, you might feel that properties are being scooped up underneath of you. As a seller, you benefit greatly from these trends. The list price to sold price ratio are closer and the days of the market are shorter, all creating a scenario that allows you to move towards your goal faster. As much as the buyers are feeling under pressure, it is very important to note that we are actually in a really healthy market at the moment. Each market segment is acting a little bit differently. Months of supplies in a rolling month right now for detached homes are 2.2 months, which is great. It is really fast moving. There is a lots of demand and the buyers need to act quickly. For the sellers, it means that they can get the best price possible. Months of supply for a semi-detached is just around 4%. Still good, but not as fast paced as detached segment. For the row homes, we are still just below 4%, very similar situation like in a semi-detached properties. And then there is the apartment segment. The apartment market is the slowest. As you probably figured out so far throughout my analysis, it currently has 6 months of supply. So knowing the pace of the market is a critical when deciding about choosing the right price to list. And also knowing the pace expectations as a buyer. So my advice here is don't just play off generalities associated with the usual seasonal trends. And if you're getting this advice from someone, you're being ill-advised. I put this buyers and seller advice segment together this month, rather than defining them separately. Because as a seller, you need to understand the buyer's dynamic, and as a buyer, you should also understand the market pace and why sellers are doing what they're doing. If you have further questions about the market you're investigating, please let me know. and I'll provide you with an expert advice. And here is my advice for investors. As an investor, this time of a year is generally when we are getting hungry to scoop the best deal out there. I know, as I look at the data and what is happening on the market, the play for acquisition is more geared up towards scoring a great cash flow versus trying to score under market value deal. Now they're out there and we are presenting them daily. But now when these people are having an intelligent conversation with agents providing proper service, the open market will very quickly provide a proper candidate for that property right now. October was a very strong month and we continue to perform well, providing us with some security to handle some anticipated struggles Calgary and area is forecast to have as the government money dries up and companies have to further pinch their pennies. This is it for this month. Thank you for watching. Please like and comment. I promise I'll reply to all of you. Don't hesitate to reach out with all of the questions you have. And if you haven't subscribed yet, please hit that subscribe button. Thank you.